There are over 14 million Americans out of work. The housing market is still in trouble. The European debt crisis seems to be spreading, and we've yet to see a deal on the debt ceiling. But the stock market, despite some ups and downs, is nearing an all-time high. What's wrong with this picture? I'm Jill Schlesinger, CBS MoneyWatch.com's editor-at-large, and I'm joined by Jack Otter, executive editor.
It really is crazy, Jill. You know, the headlines all tell us every day how terrible everything is, right? As you said, they can't get it together in Washington. Oil, a barrel of oil is up $10 in just a week. If Greece blows up, does it take down Ireland, Spain, Portugal with it? Half of all U.S. money market fund money is in European banks.
Now you're making me feel like I should sell everything, but the stock market's up.
That's what's crazy. The stock market's up. What's going on?
Well, I'll tell you what's going on. Not to make everyone feel worse than they probably already do, but you know what? The stock market isn't actually you or the economy. The stock market is made up of companies and their corporate profits. Corporate profits are nearing an all-time high. Just a recent report out that said during this recovery, 88% of all the gains in the recovery went to corporations. Only 1% went to wages and salaries. Do you know how infuriating that is for people? And they should be mad, but this is not illegal. It may be, you may think it's immoral, but it's just the way it is. And this is a very strange period of time, Jack. I'm not sure it changes dramatically either.
Yeah, I mean, it's earnings season right now. Alcoa came out and doubled its profits from the previous period. JP Morgan, a bank, right? Everything's supposed to be going horribly. They surprised with better profits than expected. And companies are sitting on so much cash right now, they literally don't know what to do with it. I mean, they're giving some back in dividends, they're buying back their own stock at hoards, but they've got more money than they know what to do with because there's no demand out there to build new stuff.
And guess what they're not doing? Because there's no new demand, they're not going out and hiring people. And when there are no new jobs, the economy kind of stuck at this 2% level. I feel like we're in a little sort of sideways pattern. I'm not sure it's going to get much better for us in the real economy, although I might say that the Federal Reserve may have given a little gift to stock investors. So if you have a 401k with the Fed saying that maybe they'd bail out the economy with some sort of action if it stays pretty slow, hey, maybe your 401k will go up, but is that really enough for most people?
Well, not at all. I mean, first of all, if you have no job, then that 401k, you're probably rating it for day-to-day expenses. But it's true, if the Fed eases, and it's funny because the Fed, of course, is trying to boost the economy by pumping more money in, but the biggest beneficiary by far are these corporations. They're borrowing money for nothing, and then even if they only make a small spread on that, hey, it's free money, and they're squeezing more and more productivity out of those existing workers and not bringing new ones on.
Corporations 1, regular people 0. There you have it. We'll keep making sense of the business headlines here at MoneyWatch.com. Thanks for watching.